warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ Lagos.
And I'm Grace Agbarago. It's Wednesday, the 25th of February. We thank you for joining us at this time on the show.
All right, let's tee off with your news now. Botswana today releases its latest monetary policy statement, setting out the central bank's policy direction for the period ahead. According to the governor of the Bank of Botswana, Lesego Caster Moseki, the policy stance is aimed at maintaining price stability while supporting sustainable economic growth. Let's listen.
The domestic economy is estimated to have contracted by 0.4% in 2025, an improvement from a larger contraction of 2.8% in 2024. This moderation in downturn is mainly due to stronger performance in non-mining sectors. However, domestic economic conditions remained challenging, particularly due to lower diamond revenues, constrained fiscal injections, tighter liquidity conditions, and generalized lower productivity. At a global level, monetary policy in 2025 involved cautious and differentiated easing across countries, reflecting variations in inflation dynamics and pace of economic recovery, as well as financial stability considerations. Several central banks loosened monetary policy in 2025 to support economic activity against the backdrop of an anticipated economic slowdown and a continued improvement in the inflation outlook. Some central banks, however, such as the Reserve Bank of India, faced renewed inflationary pressures and adopted a tightening stance.
Esteemed guests, regarding domestic monetary policy in 2025, implementation was against a challenging environment characterized by weak growth, changing liquidity dynamics, and heightened uncertainty around traditional growth drivers. The bank maintained the...
Meanwhile, Emirates has launched a first-of-its-kind split payment option for travelers in Kenya through its partnership with Cellulant. The feature, powered by Cellulant's Ting, allows customers booking on Emirates' website to combine mobile money, mobile banking, and local cards with up to 4 installments within 24 hours. The solution has debuted in Kenya and is expected to roll out across other African markets in the coming months. In South Africa, the 2026 national budget speech has been delivered by Finance Minister Enoch Godongwana. Presenting the budget to Parliament, the minister outlined government's fiscal priorities for the year ahead, focusing on economic recovery, debt sustainability, infrastructure spending, and social protection against the backdrop of a tough global and domestic economic environment. Let's listen.
Honored members, allow me to turn to the global and domestic economic outlook. The global economy is projected to grow by 3.3% in 2026, broadly in line with last year's outcome. Advanced economies are expected to grow moderately, while emerging markets will continue to anchor global momentum. India and sub-Saharan Africa in particular are forecast to grow more strongly, supported by resilient domestic demand. These developments are unfolding within an unprecedented global trade environment, characterized by persistent geopolitical tensions and shifting trade policies which are reshaping supply chains. In response, we need to diversify our trade portfolios and secure our markets, reduce vulnerabilities to external shocks, and position ourselves to benefit from the emerging global growth centers. On the domestic front, our growth outlook is steadily improving. We project real economic growth of 1.6% in 2026, an improvement from the 1.4% estimated in 2025. This improvement reflects the continued strengthening of economic performance from the second half of 2025. Over the medium term, growth is expected to average 1.8%, reaching 2% by 2028. Honourable members, allow me to turn to the global.
In the meantime, Aliko Dangote has announced plans to build Africa's largest detergent feedstock plant at the Dangote refinery complex, expanding it into a full industrial hub. The project will produce 400,000 tons of linear alkyl benzene annually, enough to meet Africa's entire demand. The facility, to be completed within 30 months, will reduce the continent's reliance on imported detergent raw materials and deepen Nigeria's petrochemical footprint at the Dangote refinery. In other news, Zimbabwe has withdrawn from negotiations on a proposed bilateral health MOU with the United States worth $367 million over 5 years. The MOU represented the largest potential health investment in Zimbabwe by any international funder, building on over $1.9 billion in U.S. support since 2006 and contributing to Zimbabwe reaching the UN AIDS 95-95-95 targets. In Ghana, President John Dramani Mahama today delivers a speech at the SOD cutting ceremony for Ghana's new float glass manufacturing facility. The president highlights the importance of local industrial development, value addition, and job creation, noting that the facility will boost Ghana's manufacturing sector and reduce dependence on imports. Here are excerpts.
Many years later, we can all see what that partnership has produced. Last October, I was in China at the invitation of President Xi Jinping, and we held an investment program. And so many Chinese companies that have invested in Ghana attended the program. And Chairman Shen was among those who, after the investment program, asked for an appointment with me. And at the time, they were getting ready to list on the Hong Kong Stock Exchange. And so he said, oh, he had good news for me. And so again, I met him, and he said, oh, we're going to list on the Hong Kong Stock Exchange. And so I came to pay a courtesy call on you and to have a picture with you so that we'll add it to the portfolio for the listing. So I graciously granted it, and he told me if we list successfully, I'm going to come and build a glass factory for you. And I said, the last time I heard about a glass factory was Abosso Glass Factory. I come in to take over Abosso Glass Factory. Again, he told me, no, we're building a brand new glass factory. And today, we've gathered here, less than a year after we met in China, to cut sod for a $250 million float glass factory. If you imagine that every piece of glass you see in this country, from our drinking glasses to our windows to our beer bottles, every single piece of glass you see in this country is imported from outside. And so this is going to be a game changer in terms of glass production. Many years later, we can all see what...
In South Africa, the Johannesburg Stock Exchange has welcomed its first main board listing of 2026 with the secondary inward listing of Canadian conglomerate Imaya Inc. The Toronto-based group, already listed on the Toronto Stock Exchange, will trade under the code AII on the JSE. The exchange now hosts 265 companies with a combined market capitalization above 25 trillion rand, reinforcing its position as Africa's largest exchange. Finally, on News Now, FMDQ Securities Exchange has approved the listing of Lagos State Government of Nigeria's 14.82 billion naira 5-year 16% Series 3 green bond and 230 billion naira 10-year 16.25% Series 4 fixed rate bond under its 1 trillion naira issuance program. The dual series transaction is sponsored by Chapel Hill Denham and Advocate on News Now this Wednesday. The show returns shortly with Grace at the FMDQ ticker tape room, giving us our market updates.
Hello, I'm NJ. I'm so happy to talk to you today about what I have coming up next month. On March 16 and 17, guess what? I will be attending the Southern African Oil and Gas Conference in Cape Town at the Central City. This is being organized by the South Africa Oil and Gas Alliance, a platform that has been strong advocates for oil and gas development, not just in South Africa, but across Southern Africa. They've led various initiatives about de-risking South Africa, encouraging investments into Mozambique, Namibia, and even Angola. But here's what's even better. This year, we stand to have discussions around deals, expanding oil and gas development in South Africa, unlocking new opportunities, but also creating that badly needed enabling environment to ramp up investment and drive into not just South Africa, but the region. Our region has been booming. You've seen massive discoveries around the Orange Basin in Namibia, massive discoveries in Mozambique. But even guess what? It's starting to move in Mozambique again. Total Energies is back. That project is ongoing. Rovuma LNG with Exxon, it's kicking off. But guess what? Even in South Africa, we're seeing Total Energies still seeing offshore the Orange Basin and moving. Eco Atlantic, we are not stopping. It means that at this conference, we are going to not just discuss strategies, but also create opportunities for local service providers to be great active participants in the region. Deals to be signed that empower people and create jobs and improve local content and develop opportunities. But even more better, being unapologetic about oil and gas. And you know, I'm not gonna be apologizing for oil and gas. We're gonna go full on drill, baby drill on March 16 and March 17. We're going to stick with a strong Southern African narrative that says that we're gonna unlock the region, open it up for new drilling, drive new energy, and do it sustainably. But guess what? We are going to push for more investment in this region. Because you know why? When we do that, everyday people benefit. Energy companies provide the gas that we need to build LPG plants, urea, ammonia, NPK, fertilizer plants to drive up industrialization in this region. South Africa is still going to continue being that industrialized, the most industrialized nation in the African continent. That is going to drive growth around the 300 million in SADC. Join us at this conference, and I will be supporting our brothers and sisters from SAUGA because they're just doing exactly what the industry is at this time. Thank you, and I look forward to seeing you there. And don't you forget, if you forget one thing, remember, drill, baby, drill, all the way. Thank you so much, and God bless you.
Welcome back to Money Moves. We now go over to Grace for today's market report. Hello there again, Grace.
Hi, Melissa. Let's now track how the markets traded across the continent, starting off with the equities as usual. The Nigerian all-share index slipped 0.06%, while West Africa's BROVM added 0.83% to 409.03. The Nairobi Securities Exchange rose 0.92% to 214.97. In South Africa, the Johannesburg Stock Exchange gained 1.42%. Egypt's EGX30 fell 2.73% to 49,014.32, while Morocco's MASI is 0.20%. On the currency front, the rand strengthened 0.74% to 15.86 against the US dollar. The Egyptian pound added 0.19% to 47.90, while the CFA franc dipped 0.07%. The Kenyan shilling was flat at 128.99. The Moroccan dirham rose 0.21% to 9.18, and the naira gained 0.35% to 1,353 naira 66 kobo as at 13:38 GMT. Let's now switch into the commodities data deck, beginning with energy prices. Brent crude rose 1% to $71.48. US WTI climbed 0.99% to $66.28. Natural gas gained 1.61% to $2.96, and Arabian gasoline added 1.53% to $2 as at 13:31 GMT. Now, finally, to metals prices. Gold edged up 0.56% to $5,205.40. Copper rose 0.81% to $5.97, and platinum surged 7.65%. Aluminium ticked 0.30% higher to $3,102.78, while iron ore fell 0.12% to $99.15 as at 13:33 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those reviews. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching, and we'll see you same time tomorrow.